Ahead, four SME IPOs have launched today from the likes of Moving Media, ProFX, Tech, Valencia and Ace Alpha. Let's go across to Snehi to get us a roundup of all of those.
Well, yes, let's talk about the four SME IPOs that are opening for subscription today and the key concerns that revolve around these IPOs. First up, let's talk about Ace Alpha Tech, the SME IPO. It's an offer issue size of 32 crore rupees. This company is engaged in legal, accounting, bookkeeping and business management consultancy services. The key concerns here are that top 5 clients contribute to more than 60% of the revenue, which means even if one client is lost by the company, it's going to significantly impact the top line. Around 25% of the issue is OFS, so it's just a promoter exit. That is a big chunk of this IPO. And despite heavy profits on paper, the company is using short-term loans and advances for operating cash. So this is something that seems fishy around this IPO. Let's move away from this and talk about SME IPO number 2. That's Valencia India. It's a diversified business conglomerate with operations in India and overseas. Total issue size of 49 crore rupees. The major concerns here are that the primary revenue stream of this company is now tied to a 20-year lease agreement with Club Mahindra, and it's a 5-year lock-in for the lessee, which means if this lease were to break, it would be a significant slash to the revenue stream. Valencia has discontinued enrolling new members, which was one of their key revenue streams. So this is also a key negative around this SME IPO. The company and its directors are involved in various criminal as well as tax matter litigations, and Valencia's business is also highly seasonal in nature. So these are the concerns surrounding this IPO. SME IPO number 3, let's talk about Moving Media Entertainment. It is a business that rents cameras to the media and equipment industry. So this is going to be an IPO with an issue size of 43.5 crore rupees. Key concerns here are that more than 59%, around 60% of their revenue comes from top 10 clients. They have seen negative cash flow and investing activities over multiple years. There's heavy reliance on Mumbai and the entertainment industry, which can be volatile in nature. So this is going to be something to watch out for, and also the business has very limited scalability. Last but not the least, let's talk about ProFX Tech Limited. It's a company that custom designs and distributes amplifiers, processors, subwoofers, sound bars and cables. Issue size of 40 crore rupees. Key concerns around this one are that over 70% of the purchases come from the top 10 suppliers. The company has significant unsecured loans pending, and which have very high interest rates, anywhere between 16 and 17.5%. They have pending tax and legal disputes, and 72.6% of its revenue comes from AV product distribution and vulnerability in shift. If you talk about technological developments and the emergence of AI, this could pose as a big threat to this business. So watch out for all of these 4 IPOs that are opening for subscription today on the SME front.
Thanks, Nehi, for putting the details on all 4 SME IPOs. But we have been joined by Tapan Doshi, analyst and charter accountant, to analyze all these 4 IPOs. Mr. Doshi, first, I want to understand from you about Moving Media Entertainment. What is your take? 60% of the revenue is coming from top 10 clients.
Yeah, thanks. See, about this company, this company is quite capital intense. If you see that debt is already 41 crores, okay, and whatever equipments they have, even one lenses, will be actually costing more than 1 crore. So overall, they have a 91 crore gear, and their employee size is almost 60. Okay, and the problem is now, if you see the last year margin was almost 43%, which has dropped to 28%. The reason is because of capital intensive, they have to take debt, and the interest cost is always on a higher side. Plus, what is the happening that the industry cyclicality is also there, like movies do well or not, that will impact. Plus, now production houses are keeping their own cameras and all that. So that is where also competition is there. Plus, some of the competitors are taking on lease and then they are giving to the end customer. So here they are taking as a capex only. So, but the problem which lies here is that one is the valuation point of view I want to talk about is then the debt is on a higher side. Again, it's a cyclical in business, and I think from here also the price is fully already there. So I don't think much left for the end customer, end investor. So I'll have a avoid on this side, avoid on Moving Media.
And avoid the call on Moving Media. Clearly, the valuations are the concern, and at the same time, as we see, the debt is also the concern. Moving to the second SME IPO, Tapan, Valencia India. Operating in highly competitive and fragmented business, and a bigger concern, like Snehi was highlighting, primary revenue stream is tied to 20-year lease agreement. What's your take on it?
Yeah, Mansi, see, no, they are diversified in real estate, okay, FMCG, club business, and all that, and their revenue is almost 7 crore only. So it's quite low. Again, if you see, this company has been losses in last few years. So if you see the PE ratio, it's already negative. Price to book value is already 10 times. Okay, so it's on a higher side compared to any of its peers. Now, whatever the fund they are going to collect now, they are going to spend on clubhouses and they are going to make some 15 villas. So you know that any type of delay, construction delay or cost overruns is going to impact their margins. They will require some debt in future. So that is also that you have to keep in mind. Again, the liquidity issue will be there once it is listed because it's a very small IPO. So post listing, you have to check that also. So overall, historically, because they are very small and again the business, real estate and all that, I think you need much bigger player. So I think this is an avoid from my side also from valuation point of view.
All right, moving next to Pro FX Tech. This company also has the same problem. More than 70% of purchase comes from top 10 suppliers. What will you recommend on this IPO?
Their core business is proprietary business, like one type of they're making proprietary trading software and all that, and that is completely linked with the stock market. Now if you see the profitability gone up now almost no at a very fast level. Okay, and that is where I think you, sorry, you talk about Pro FX Tech, correct? Sorry, my mistake. I was talking about Ace Alpha. Pro FX I'm talking about, then it's in AV business. My mistake, sorry. So if you talk about Pro FX, no, 71% revenue is coming from a third party distribution. Now, if you see here they don't have their own brand. Now, if they had their own brand, then the margin will be on a higher side. But they normally take the third party products and they sell. Again, no, the margin is around 13%. Again, if you see their overall three centers they have, and in five urban cities they are already there. But the problem is, no, there is lot of competition from online players in audio, video. No, retailers there are lot many are there, and they sell much better at an online level. So they have a lot of competition there. Again, working capital is required a lot. So looking at that, at the PE ratio is around 9 and 3 times price to book value. I think no listing gains are there here also. So it's an avoid from my side for Pro FX Tech.
Avoid call on Pro FX Tech as well. And Tapan, last but not the least, Ace Alpha. 60% of the revenue coming just from the top five clients. What's your take on Ace Alpha?
See, Ace Alpha, actually, their main core business is like a proprietary software they are making for trading software. And if you see the profitability from 0.13 crore, it has gone about 10 crores. Now, out of that, I think possibility proprietary trading income will be there. So this is not sustainable in the future. Again, they have a very short history, almost 2 years. So you cannot take a call whether this company is good or not. Plus, top five client, as you told, 60% of revenue they are having. So any type of loss of any of this client will have a direct impact on their profitability. Again, whatever IPO fund they are going to take it, they are unclear where they are going to use it. Either is it for acquisition or general operation. That is also not clear from the management point of view. Now this IPO was to come at 107 rupees, but actually it came around 69. They actually reduced the price because even they felt that no, it is on a higher side, but whatever. So that is also one negative. So 9 employees, scalability risk is there. Again, SEBI anytime can change the rules. So all this does not give a good feel good factor for this company also. And looking at the valuation, if you see it is trading at 30p, however, their peer like 63 Moon is trading around 23. So on that side also, I think this is on a higher side. So that is also an avoid from my side.